Hey, this is Elliot Wave Sage. I want to go ahead and just do a market update. Like always, none of this is financial advice. Always do what's best for you. So I've been out for a little bit. I had some personal situation that I had to deal with, and had a death in the family, and that's always a tough situation, challenging time. So trading definitely took a backseat to that for the last week or so. But now we're back, and it's a good thing to have really just ignored the market for the last week. So this kind of vertical price action typically is a sign of a corrective structure when you see that, because the way the trend typically plays out is you impulse down and then you react higher. So if you could see here, you have 5 waves here for an impulse, and then you react in this kind of way, crash upward. Like in an uptrend, you will get 5 waves up, and then you get this like crash, right? And then everyone buys the dip, and the trend continues. This is what's happening now, just in reverse. It's just the opposite. So you had a 5 wave move, and now we crashed, and now the sellers will come in when they get more confidence that the trend is shifting. Today, with the bond auction failing as way it did, that's now maybe set the tone for the next week of trading. So right now we did break through this downtrend line, which was expected. If you're correct in this cycle, you would expect the trend to break. We did. This, as I always said, every time you have overlapping 5 waves, the market loves to come between the 2 and the 4 wave. So I kind of marked that with this line, and as you can see, we just missed it by about 0.5, and now we reversed. So more than likely the move is over here, and now we will start the next wave lower. And it will break this low that we have here at 342, and it will surprise a lot of market participants when that happens. The question is, what would the nature of this third wave, what is it going to turn into? It could turn into something much more sinister and break the October lows potentially, or it could find support in this general area and go to new highs. The chances of this, just run into new highs is very low and unlikely. There's another, obviously, alternative out there where you get some kind of, zigzag like this. But my guess is if this were to happen, you'll get a very deep retrace in B and a very minor higher high in C. Something like this is the nature of the wave. I don't think if it's shallow, then more than likely you're breaking this high, which would be very interesting. A lot of other possibilities that I wouldn't try to figure it out at the moment. But I do think you can't rule something like this out that I have here, something like that. So you got to be careful trading it. But what I would say pretty much is, as long as you're about outside this trend where it found support today, the bulls are still in charge of the market. But once we fall back below it, which it looks like we're doing after hours, then the bears have taken control. And we had a similar trend line in the Russell where it failed and it created the drop. Here we had this kind of breakout. I don't have it drawn the way I had it earlier, but if I were to take this line and do something like this, you see how we had that break of trend, and then once we got back below it, that was our signal to dump Russell, and if you wanted to short it, and you really haven't looked back since. So I believe the same situation will happen with the NASDAQ, where you break this and then it just kind of starts to unravel on itself. That's just kind of like the Russell did, and then this pattern would be a false breakout on a higher time frame, which would be bearish and trap a lot of Fomo. And that's what the market did the last few days. A lot of Fomo, a lot of trapped money, And all these folks will actually end up dumping it at support to break support. That's what always happens. So I do think we're into now. This wave is getting extreme. You can see the 4-hour cycle is rolling over finally. The daily cycle has fully reset and is about to cross over and roll over. So the pump is over in the 4-hour and daily. The weekly cycle does show some opening. What this tells me potentially is we do get support here at 330, and then the weekly cycle can take the market to new highs. So you have to keep an open mind that there's a viable dip coming up, unless the weekly cycle gets hammered hard, which would mean essentially a crash to reverse this and reverse this back down. And I think I've seen that occasionally, like right here, March 18, right? You hit it and then slam back down. So we could see that, but you need some heavy selling pressure to do that, which would obviously be the case if it's going to go back and break the October lows. So right now, I'm not going to worry about what we do here. Right now, it's, the market signals have shifted now back to 4-hour bearish, daily bearish. Let's see the 45-minute. So the 45-minute is really been pushed back, but met with a lot of dip buyers. So it's aggressively being bought. This is aggressively being bought by shareholders right now, by investors, by traders. But I think even if short term it can still rally, it will fail spectacularly because the 4-hour and daily is not. You're fighting against those two now, and which means that any rally should fail now. Even though the 45 has been pretty beat down with some hidden bullish divergence there. So again, you can expect a bounce. Now, could this be a connector wave for this move? That is possible. That would be an expanded flat scenario, right? That would be very surprising, and that gets you to 401, right? So 401 breaks this high, and so the question is, what would this become? 398. So this would become an expanded flat correction, something like this. Good thing would be this structure would be mean the market would be supported, no super crash. It almost eliminates that possibility by breaking that high, but it doesn't eliminate this break, and then we move for another wave higher in 5 right here, right up, something like that, to new highs, of course. Something like that, and then we crash later next year. Like that. So treacherous trading. You got to be careful. If we get this kind of pattern, this will definitely destroy bulls and bears. So you got to keep an open mind to every possibility. The 45-minute is showing something like this is possible, but the 4-hour and daily show it's not likely. So we'll see how this plays out tomorrow. But if you're a bear, you really want to get back under this downtrend line, and then you take control, just like the Russell, and then I think it can start filling these gaps down here. Now, one of the things we have on the SPY, we never made it to the area 443 that I want to. So this is also telling me here perhaps, we have something like this coming, right? Which would also be this scenario I was showing you earlier. Like that, something like that. So just keep an open mind to where we are heading. It doesn't have to do that. It could be over. We hit the wave 4 peak and that means it could be done here. The Dow Jones hit this massive resistance. This is super duper resistance. This was a false breakout on, I think, a weekly time frame, and we got rejected. And then if you really watch this, it's really interesting chart here. It gets rejected. It tries to find support on this trend line. It breaks it. Finds support on the last trend line you can. It breaks down. You're ready for the crash, and then it's saved. And now it's sandwiched in between these two areas. And I do believe when the decision is made, a massive move will come. And more likely, the move is going to be lower, sadly, for those in the market. And let me change that. That's the right way to label it. So this, to me, again, looks like some kind of 5-wave move up. So you got to be careful that it isn't something like this. Right, again, get a false little breakout and then down. So you got to be careful there. This does look like 5 here, and so because of that, I think the safer way to label these charts, just for now, is this type of label. But you'll have to do what's best for you. So I'm going to label these with an extra swing. And I know if you're a bear, you don't want to see this. You want to like hurry up and crash, will you? Well, it will. It's just gonna, it's gonna test the patience of the bears and the shorts, and really blow them up if you have leverage. All this back and forth price action here, and then here's another one. So something like that is what I'm looking for. Again, do what's best for you. Something like that. And then it's God help us. Now, this C leg can surprise people. And the definition will be when B is set. So we're in B. Right now we're in B. Tomorrow's trade is important because if it can find support here, that's going to be a very shallow connector. If it breaks it, then I believe it will grind lower and fill a lot of these gaps, probably down at least to 356, but I bet we'll even get to 352 and then come back up for another type of pump, like something like that. But this C leg isn't guaranteed. I could have this labeled off by a swing or missing a connector wave, so you'll have to really do what's best for you on that and figure it out. But I do think ultimately the trend's lower, and that's where I would be looking for the IWM. This tended up being 5 waves, perfect Elliott wave pattern, and now you're up in 3. So this one doesn't have a 5-wave look to it on the correction, so this actually can be finished, and this could lead us to much lower price levels. Yes, 120 on the Russell. I mean, man, and remember, by breaking the October low, the house showed its hand. It tipped its cards to you. It's too late. They can't pump it. The algorithms are on it like bloodhounds. They sense weakness. This thing's going to be shorted into oblivion, and that's what's happening. I mean, if you really want to short an indices, short the Russell. It's probably the best setup for shorting. And again, if this is a connector, the two can come up, and that would be an awesome short setup here if it could do something like this, which is unlikely given where the indices are at the moment. But if you can get a 3-wave look, something like that, this third wave, we can do this move and short that. Here it's not really good, but it could still be finished here. But do what's best for you, of course. Until the Russell goes lower, there's really not much I would really want to go long in the indices. And we saw this warning sign back in October when the financial sector made the lower low swings, and then it had some massive relief rallies, and now those are all failing. So this is the market setup. So that's the indices. Then just kind of looking through the rest of the market, China, kind of in this 1-2-1-2 crash formation, I like to call it. It still looks like we're still in the same cycle lower. So I would be really careful with the China. We're right. See how we're getting rejection again. So we're in the same daily cycle lower. So despite all this pumping, China never benefited. Um, People posting the Nikkei, about the Nikkei. I don't see anything interesting to talk about there. Bitcoin's caught a lot of euphoria. So I'm going with the label right now that it's just an extended C leg that we have. Normally C ends in an impulse. So this was the proposed endpoint that was negated. Now we're going higher. So I do think Bitcoin still should hit the 40,000, 42,000 area. It may trade within this bear flag that I have drawn. May not be perfectly parallel, but do what's best for you. I do think we're due for some kind of four-wave pullback and then another move higher. And then I do believe, given now the massive rally, we really just have a connector wave for the first leg down here, the next wave, and then the next wave down to these levels. Unthinkable levels for crypto, but I do think we'll hit these lower levels as everyone has FOMO'd and got trapped. And the sign that this is a trap to me is none of the other coins are moving with the market. Neither is the crypto equivalent stocks. This is typical for me of a connector wave. There'll be a massive retrace even if this labeling is wrong and this is the bottom. I still expect Bitcoin to be in the low 20,000s. And then we can either decide if this is a pattern we'll let play out or we'll negate it and buy the dip. But I do think this is kind of what we're looking at the moment, and we'll see how this plays out going forward. Gold did fail right where we had it. It was really trying to stretch it, but it succumbed to the bearishness of the market and strength of the dollar. And this will be the area to buy gold when it gets down here again, 1720, 1680. Silver is a wild card. It did hit the short area we had and it's been rejected like expected. Silver could retest as low at 1718. If it breaks the low, then you could see the retest at 13 or 14. It would be hard for me to see silver get there without a market crash below the October lows. This is an interesting setup right now. So I would be really careful in silver if gold isn't performing. I just am not liking what I see in these charts on the metals. Dollar index hit the buy area, bounced, and now it's kind of playing around. Unfortunately, it's got to go much higher than where it is today, despite people's bearishness of the dollar. I do expect this to make one more leg up into this colored area, and if we break this high at 114, then this area all signifying massive deflation in an indice meltdown. That's what that would signal to me. And again, I could be wrong, but we'll see how this plays out. I have mentioned, should I FOMO into bonds? And my answer has always been no. Don't FOMO into bonds, but I know some people just can't help themselves. The reason for it is the bullish sequences that I'm seeing. You have one massive swing with a higher high here. This has to play out. So this is a buyable dip in rates or short in bonds. The next area of support would be 432. I was always expecting that. Perhaps with the market and the indices, you get this WXY action in the rates where you come back up and come back down like that. So be careful, but I do think this can, we could be in this X wave, the indices pull back, we come down, the indices make that C leg, then the indices peak, and then we get all hell breaks loose for whatever reason, and I don't know why. Maybe it's the government shutdown, who knows why. the rates will go parabolic, but you have to do what's best for you. But I do expect the 10-year to peter out around 7 or 8% on this major weekly cycle, and then have a massive multi-year pullback, and then we can worry in the 2030s about the double-digit rates and shit like that. But right now, this is where I would be buying some bonds up in this area, not in this area. But you got to do what's best for you guys. These rates are really juicy and tempting, but too many people wanted them. Too many people saw it. Market bottoms come when no one wants it. No one saw it. No one wants anything to do with it. So that's when market bottoms form. So we don't have it. We don't have that. This was too obvious, and now all those people here are going to be trapped soon. And then they'll panic and they'll sell up here their bonds they bought, realizing what a dumb thing they did. But that's okay. A lot of people make mistakes. So just hang in there. There's a secular shift in interest rates higher, and this will put pressure on valuations and stocks. And let me say something about valuations. And not everything may get dumped in the market. You'll be a stock picker's market. I'm not going to say everything's going to go to zero, because I think there are some trades that will work here. But now here's the thing. People are like, oh, it's tech. Valuations don't matter. It's all about technicals. Well, valuations, I think, my opinion, Elliott Wave Sage says valuations do play a role in the market moves, because if the company is too overvalued, it's too richly valued, the PE ratio is too high. What that tells me is, in a high rate environment, it's not going to give you the return in terms of an equity and cash that you would normally expect an investment to provide you. It's essentially, in a high rate environment, the PE ratio should fall, and that's why growth is hit. And then on a low valuation, it can't go to zero if the company makes money, right? It'll be bought by another company. So there's always a floor, a book, it's always a bid. Someone will buy the company if it makes money. Now, if the company doesn't make any money and it has no cash flow, it is negative earnings, a PE ratio of infinity because it's negative earnings, well, it's going to go bankrupt in this kind of environment where you have the cost of capital isn't free. So that's the thing about these high PE ratios too, or something on price to sales. So even if the algorithms can keep your stock trading at $100 a share and it bounces around, while the algos wash these trades between each other back and forth and back and forth, when the company reports it's bankrupt, like Rework, boom, overnight it drops to zero, and there's no warning. Because the natural price discovery of the market has been circumvented by the algorithmic type trading and people that can move the market with because they have the volume and they use the options to do it. So that's the dangerous thing, and we saw that in the regional banks. Like, banks trading at $50 and $60, and overnight they're bankrupt to zero. And no algo can manipulate that. When the bank company goes belly up, you can't. Maybe it could still play with the penny stock. But my point is, you got to be careful out there. You got to pay attention to some of the fundamentals. I do think high valuation, high PE, overvalued crap is not going to work in an investing environment coming up. You need companies with stable, good cash flow that's really not sensitive to this interest rate environment, right? Higher rates won't really hurt it, or maybe even help. They benefit from it, and that doesn't leave a lot out there. Again, so do what's best for you. Oil here. Again, just like I forecasted, people are baffled, but Elliott Wave Sage is not baffled. But we're gonna one more low here on this swing, and then we should see a pretty good relief rally, more than likely back up to 82. And then right around that level or so, then we get the capitulation wave in oil, the Y wave, and that will probably coincide with the equity meltdown of whatever happens, with an ultimate low at $50.46, and maybe like oh crap target of 38, you know, so this one's kind of like your poop in your pants target 38, 30. So it's just going to have a big washout of leverage and panic, whereas this pattern finishes, and then when it does, it will break, and we'll see where it stops. Uh, but I do think it's due a bounce. What would negate the idea for the bounce is, of course, momentum divergent, and you're going to see divergence be set up on this next push lower. Now, if we erase divergence, then maybe the connector's already in and we just missed it. We'll have to see. Okay, so that's the market. VIX essentially had a crash in a bigger connector. So you have this WXY, and now you have a three-wave connector which ended. If it does push lower, I'll just relabel this a little bit, but I still am looking for these higher targets. So what I would do here with this line is kind of move it up a little bit more, and you really just had a false breakout of this pattern. I do think this pattern will play out, and it needs to finish to give more stability to the market. The other option that makes it more bullish, could this be a massive left shoulder and then we form a head for a much bigger crash later? It's possible, but not likely. Okay, I'll go through some individual stocks real quick. Technology, start with Apple here. Again, I mentioned this earlier. This could be a lot of possibilities here. Could be 5 down, 1, 2, 3, 4, 5. You can see the 5 waves within this wave. You really don't see that there. So CBA, so I don't really like this pattern to trade it. There's too many possibilities for labeling, so I'm not going to really talk about Apple here. Amazon should be ready for a pullback and an A, B, C, and a massive expanded flat. I think this high will be respected. If a high breaks, then it opens up a larger impulse, in my opinion. A 1, 2, 3, 4, and 5, and then we'll just fall later. And then this needs to be relabeled. Tesla had this 4 wave, could be finished, may take one more swing higher, but ultimately going lower here. Facebook should make another dive lower down into this area, and then we'll see how it goes. Netflix, looking for this counter trend really to fail and go lower. Adobe was being pumped, I heard recently. So I changed this. This looks like a triangle, A, B, C, D, E, and then a 5-wave move up, and then that should end Adobe. AMD is in a flat in an X, so it just extended X out. That's why these flats really do destroy traders and really trick them. And connector waves are so hard. They can even be triangles and everything else, but we do still think it's got another swing lower. Nvidia's got the same situation here. So Nvidia mentioned, looks like to me it's some kind of 5-wave sequence down. So all our shorts worked on Nvidia, and then now this being the count, we like to go between the 4 and the 2. And I'll pretend not even to look at where it stopped. I would put it right there, and look, that's exactly where it hit. So more than likely, Nvidia is over here. Whatever this is done, and now we should get this pattern to play out. Let's see. I haven't really been following a lot of the market, just trying to kind of keep up with things and see how things are going. This is a connector. How's Wayfair? So this is either done or it's gonna, this low has to hold in Wayfair, or it's going much lower. Trade desk got blown up on earnings. This was the count. Crash formation 1 2 1 2 1 2, and sure enough, I think it's down in the low 50s right now, in the 3 of 3. So this will just keep grinding lower, guys. I mean, this is a massive top in pattern. There's your neckline at 39. When the neckline breaks, it's pretty much down to 17 or 18. And this thing, I think, trades at a pretty high PE ratio, high valuation, and those things just aren't working anymore. Do what's best for you. But anyway, this has been a very tough stock to trade, this top. Okay, so let's take a look at a few others that caught my eye here. Let's go to here the consumer staples. Yeah, Celsius got rejected. Again, 5 and 2, and now we're going into the 3 of 3. Let's look at the anti-GLP-1s. These have been pretty much really weak. I'm looking for McDonald's. Because people were again talking up McDonald's. It could still come back and make one more high, but yeah, it's probably got another. So this is also kind of helping me understand where the market is. Maybe it does have a bounce coming here. All right, crypto equivalents. Let's take a look at Mara. Look, guys, this is your warning sign. Bitcoin, something's not right there. Neither is Riot. These things should be up here, guys. So something's wrong. That's a warning to me. Something's wrong. Let's look at Bank of America. 18. Looks like it's 1 of Y done. Right, something like that. Man. Let's take a look at healthcare. Yeah, there's just stuff getting obliterated out there. Let's look at mRNA. Support area is really 56, 57. You saw that's a pretty good bounce. It looks like 5 waves. We'll have to check divergence. You want to make sure if divergence gets erased, I wouldn't touch it. If you have some divergence there, I would be okay here. But if it gets erased, then it's going to do the unthinkable and come all the way back, a full round trip. Amazing. Spectacular. I mean, isn't that something? A full round trip. If that could happen. People have followed in pod. So pod's at a moment of truth. It needs this 5th swing. If it can get this 5th swing, then the bottom's in and a new cycle is born. And then also you have this inverse head and shoulders that will push it to maybe 200. If you can't get this 5th swing, it's corrective. And then the unthinkable will happen if we break 125. So keep an eye on it. This is the line in the sand. Breaks 126. It's essentially game over. And the reason I say that is because this would just be 1, 2, and then you have 3. Okay, nothing else to really see here. Let's go to some of the requested stocks that I keep a track of that you guys have asked me for. Carvana, I know, is a popular one. Now you have a connector here. It's too early. Didn't reach it. I would not buy it. There's more likely this bounce will fail. And when it does, we'll get a new opportunity to buy this. I was trying to see some things that stand out to me. This is another popular one. Just like we said, pretty much straight down. What happened? The cycle ended. Not everything goes up all the time, forever. ISRG, lower. Snowflake. Wants to break out of this pattern, and when it does, it should drop down to here. Okay, so I think the video is long enough. I'm going to wrap it up. So basically, what to expect. So a couple of things. This is an unorthodox bottom, and that's a signal that this would fail, and we're going to break this low at some point. We got a massive rally, but it's still susceptible to a retrace. We knew that this massive trend line that I have in black should result in a bounce the first touch, and it sure as hell did. It even broke it and got back through it like a trampoline. But now you have another unorthodox bottom here, just like but it's a bigger cousin. And so you got just enough of a breathtaking rally, but that too will fail, and eventually the market will succumb. And we see signs of it all over with individual stocks massively breaking down. And eventually the Magnificent Seven will do the same. So this is what I'm looking for. Right now, this pattern right here that I'm showing is kind of what I'm expecting. And then this is where the market will decide. Super crash, new lows, October lows are broken. And then you get a buyable area here. Or you finish out the correction right around 386, 390, and then we go up a whole nother sequence higher, and then we go up maybe to like 510, and then we have pretty much a straight down crash correction for some catastrophe, maybe constitutional crisis, Trump wins in prison, who knows, and then you essentially get all this people wiped out in something like that. So we won't know until it comes where exactly we're going to go, but I do think short term, clearly the 4-hour and daily need to pull back. The 45-minute is questionable. There's some hidden bullish divergence, so you may see the market actually bounce still. And then, ironically, if it can bounce and break this high, it could actually set up for a shallow connector, something like this, and then get this C leg and then finish it up this way. And we either retest this high or break the high partially with this pump like I have here. So that's why it's really hard to trade the indices. The best indice trade right now is short the Russell if you can get a bounce on this two wave that I have here, if it does that. Without that, it's really just kind of watch what happens. All right, guys, that's all I got, and I'll talk to you later.